This video is going to show how to buy options in the stock market. Now, to buy options, the first thing you need is a brokerage account where they cater to options trading. A brokerage account is kind of similar to a bank account in the sense that it's a place you can put your money, but it's different from a bank account in that it allows you to buy and sell stocks and options for many brokers. There's tons of brokers available. There's E-Trade, Schwab, Fidelity, the list goes on and on. Right now on my screen, I'm using a trading platform available from TD Ameritrade that's called Thinkorswim. It's a free trading platform. So I'm going to demonstrate how to buy options using this particular platform. But there's a lot of options when it comes to brokerages to use for trading options. So on my screen, this is a stock chart for Bank of America. The ticker symbol is BAC. And I'm going to go to the options chain to show how to buy options. A lot of trading platforms will have an options chain, and it might look like this. So if you've ever seen a big grid of numbers that looks like this, you might have been looking at an options chain. And so I'm going to walk you through how the options chain works and then show you how you can place an order from the options chain. Not every brokerage allows you to place your order from the options chain, but many do. And either way, this will give you the intuition you might need to figure out how to do it in your own trading platform. So we have separate videos that talk about what options are in the first place. And I will briefly just highlight that options have a few key characteristics. Options have an underlying stock that they're tied to. In this case, we're going to be looking at Bank of America. They have an expiration date, and you can see there's different expirations for the options here. They're either a call option, this side is the call options over here, or they're a put option, and this is the put options over here. Call options typically go up in value when the underlying stock goes up in value. There are exceptions, but that's generally the way that call options work. And put options are the reverse. If you own a put option and the stock goes down in value, then many times the put option's value will go up. So if you think the stock's price is going to go down, you might buy a put option. If you think the stock's price might go up, then you might consider a call option. The last component of any given option is the strike price, and that is right here. So if you have any need to learn more about any of those various aspects of options, whether it's a strike price, call or a put, the expiration date, or the underlying stock symbol, you can check out our other tutorials at stockmarketguides.com. We have separate tutorials that explain each of those things. But for this, I'm just going to now go ahead and show how to actually buy an option. So let's say that you've determined you want to buy a particular option. Let's say that you want to buy the option for Bank of America with the August 18th expiration date, and that you want to buy a call option with the 28 strike. So this is it right here. And the way this particular options chain is set up, you can see this column is the bid and this column is the ask. So for the 28 strike call option, the bid is 330 right now and the ask is 340. So that means that you're likely going to pay a price somewhere between those two if you were to buy that option right now. Now, I'm showing this example and saying, that I'm envisioning that I already have in mind that I want to buy the 28 strike. But, getting to the point of knowing which option you want to buy, that's its own big topic and not a topic made for this video. It's a huge topic. And we at Stock Market Guides, we have trade alerts for options picks that we come up with that can help you determine which option to buy. But this video is not going to talk about how to determine the exact option to buy. We're assuming that you already know which strike price you want, which expiration date you want, and we're just going to show you in this video how do you actually buy it. So anyway, the 28 strike, the bid and ask are right here. In this trading platform, you just right click and go to buy. And there's all these different types of exotic options, option strategies available: strangles, straddles, butterflies, condors. If you just want to buy a simple call option, a lot of times it's referred to as a single call option. And so we're going to do that. And so it brings up this screen here. And this is the information you have to fill out to place your order. So let's go through the fields here. We'll just go through each of these fields to make sure they're filled out properly. The first column says single, and that's because I indicated that I wanted to buy a single call option. The side is buy, and that's as opposed to sell. We're trying to buy a call option. The quantity, this is how many contracts you want to buy. So we expect the price is going to be somewhere between the bid and the ask, $330 to $340. And you know that when you buy an option, the amount you pay for each contract is 100 times the price indicated. So let's say the price that we end up buying this for is $3.40 per contract. Well, for each contract, you need $340 because that contract controls 100 shares of stock. You may not ever have any intention of buying or selling the stock, and that's totally normal and fine. But to control that contract, you need to pay 100 times the price that you pay when you buy that option contract. So let's just imagine we only want one contract. We'll change this to 1. The symbol, this is for the underlying stock symbol. We already talked about how that's BAC for Bank of America. And let's see, it looks like the strike, I apologize, the expiration date, we already talked about it. And it's kind of, a lot of these fields are auto-populated because we set up our buy order from the option chain. So that kind of makes it easy for us because it already knows what it is that we wanted. So we said Bank of America, August 18th expiration, the 28 strike call option. The link field is blank in this particular trading platform. That's one that we don't need to use to simply buy this call option in this case. And the price. The price and the order type. These are the two we should talk about next. There are different order types. So there's market orders, limit orders, and other types of orders. And when it comes to buying call options or options in general, most times I would say people use either a market order or a limit order. And so I'm going to talk about those two. So a market order, I will select it here. A market order, you'll notice that the price is not one we can control. It just says market. And that's because if you place a market order, you're saying, when you place an order in general to buy stock or buy options, there are kind of two things you can specify to try to control. One element is the timing, and one element is the price. And basically, the market order prioritizes timing over price, and the limit order prioritizes price over timing. So market order says, I don't care so much about the price, I just want to get in right now. So for example, if this is the bid and the ask, 330 and 340 respectively, a market order says, go find the closest seller price-wise, in this case 340, and just place an order, match up with that seller, and buy the option from them. And so in other words, you're willing to pay the ask. You're not going to play games with trying to get a lower price. You just want to get in. And so you could use a market order in that case to just ensure you get into the position. The trade-off is you might pay more than you need to, or than you could have if you had used a limit order. Now, when you use a limit order, you can specify the price. You can specifically say, I only want to get in if it gets down to my price. And so we can see the bid and ask have changed here a little bit. It was 330 before and 340. You can say, I only want to get in if the price gets down to 330. So this is prioritizing the price over the timing. The trade-off in doing that is, yes, you get the price you want, but you may not ever get your order filled. In other words, there may never be a seller who is willing to sell it to you at that price. And if that's the case, then the price might go up and you miss your chance to invest in that option. There's no perfect way to handle buying options. There's no perfect solution. It's just a trade-off to weigh between your preferences of time and price. So the market order and limit order give you that trade-off decision. After you decide that, then you have to decide the time in force. TIF stands for time in force, and it's either day or GTC. Day means I would like to leave this order open until the trading day is over. And specifically for the US stock market, the stock market closes at 4 p.m. Eastern time on trading days, which are typically weekdays that are not holidays. So a day time in force means I might place this order and say, if the price gets to 330, I want to buy it. But if the price doesn't come down and I don't get this order filled, I don't end up officially buying an option contract at that price, then just drop the order off the books and I don't want to pursue it any further. GTC stands for good till canceled. That means no matter when this occurs, so long as you don't cancel this order yourself manually, then this thing's going to stay open. And so in other words, if you're saying, I want this option at $3.30, even if it doesn't happen until next week, then you can use a GTC time in force. And so that's up to you. You know, of course, when you're buying the option, you know what your intentions are. And this allows you to communicate those intentions through your order. Exchange, not all trading platforms will prompt you to fill this in. But basically there's different exchanges for making transactions. I shouldn't say most, but many platforms won't prompt you for this. They just automatically find the best exchange. In this particular trading platform, this Thinkorswim, they do allow you to have a choice. And so some trading platforms are known for extending many choices to traders. So if you get to the point where you care about which exchange is used to do your transactions, then a trading platform like that might be for you. If right now you just want to keep it simple, then just going with the best exchange is the way to go. And again, many trading platforms won't even ask you this; they'll just automatically do that on your behalf. But that's it. That's how you set up an order for buying options. You would hit confirm and send. They give you kind of a little confirmation dialog in this trading platform that says, are you sure? And notice that, I specified a price of $3.30 and one contract. And notice that they're indicating $330, 100 times the amount that I entered as my max loss. And that's something to be aware of. It's the 100 times the contract price. And also when you're buying an option, it could go to zero. And so that's basically, the amount you pay for an option is representative of the risk that you have in owning that option. So that is how you buy a call option. To buy a put option is very similar. In this trading platform, you right click here, buy, and again, go up to single, and it's just filling in the same information. Now, what happens if your trading platform or a brokerage doesn't have an options chain, or if you can't buy options from the options chain? Well, wherever they allow you to buy options, it probably is just going to look a lot like this, because essentially these are the fields that need to be filled out in order to submit an order to buy an option. So at this point, after watching this video, you know what each of these fields represents. So in your trading platform, no matter how you get to that ordering screen, I hope you have some better understanding and perhaps even intuition now about how you would go about filling out those fields. If you have any questions about buying options or any questions in general about trading or investing, you can contact us anytime. Our email address is support@stockmarketguides.com.